In this video, I will be going over two of the most common order types, the market order and the limit order. And I will compare them both to see how each order type can best suit your particular trading needs to ensure that you maximize your profits and reduce your losses. If you haven't already subscribed to this channel, then make sure you do so you can get similar videos to help you on your journey to becoming a more profitable trader. So let's get started by defining what an order type is. An order is an instruction that a trader gives on a trading platform to buy or sell a particular security like a stock or cryptocurrency. In this video, I will be comparing two of the order types, which are the market order and the limit order. A market order is the most basic type of trade. It is an order to buy or sell immediately at the current price and is popular among investors who want to buy or sell a stock without delay. Typically, if you're going to buy a security, then you will pay a price at or near the ask price or the higher price. And if you're going to sell, you will sell at or near the bid price or the lower price. So if you want to get in or out of a trade immediately, no matter the cost, then a market order is the one you want to use. The advantage of using market orders is that you are guaranteed to get your trade filled immediately at the market price. A limit order allows you buy or sell a security at a price that you set. This price is called the limit price. A buy limit order allows you purchase a security at a price you specify, the limit price, or cheaper. While a sell limit order allows you sell a security at a specified limit price that you set or higher. So let's first look at the buy limit order. Now with a buy limit order, you want to pick up your security at a specific price. That's the limit price. So you're saying, I don't want to spend more than a certain amount of money to open this position. And that amount you're not willing to go over is the limit price. In this situation, it's $75. But right now, the price of this security is trading above $75. So you wait until price action comes down to the 75 limit price line. Your buy limit order activates and picks up your security at or lower than your limit price. And so in this situation, you've been able to purchase your security at your limit price of $75 or better. Now do take note that with a buy limit order, you could actually end up buying your security at a much cheaper price than the actual buy limit price that you specified. This would occur in a situation where there's a gap down in price or in a very volatile market. With the sell limit order, we've purchased our security at $75 and we only want to sell it at $80. So we don't want to sell it for anything less than $80. $80 would be our limit price. And so we'd have price action coming and going until it gets to $80 and initiates the sell order. So to recap, you would use a market order if you want immediate execution, but at whatever the current market price is. With a limit order, you get to specify the exact price at which you want to purchase or sell your security, but there is no guarantee that price action will actually reach your specific limit price. Hence, there is no guarantee of execution. Well, that's all, folks. I hope you've learned something from this video. And if you have, the only thing I ask is that you hit that like button, comment below, because I do use your comments to better inform me of what other content to create. Share with your friends and family. Make sure you subscribe to my channel, but most importantly, don't forget to hit that notification bell. That way you get my videos as soon as I upload them. And I'll meet you in the next video.